So what are people doing out there? And as much as these prescriptions of diversification, which by the way, one of its sort of consequences was the rise of the mutual fund industry in the US to a $14+ trillion behemoth, you start needing to think in terms of what are people doing? And it turns out that no matter where in the planet you go and look, people tend to be underinvested, which is that a large proportion of their assets are not even held in financial terms. Here in India, that proportion is really, really low. People, not only are they underinvested, even when they are invested, they are under-diversified. So at some level, people are not really yet, despite decades of pressure, following the prescriptions and the mantras that academic finance tends to offer to most of you. But there again, academic finance is also an evolutionary discipline, and you might find that, okay, if you don't like this idea of not putting eggs in one basket, let's look and see if there are alternatives. And there have been in the West, and I'm sure in other locations as well, investors who have followed kind of an alternative strategy, which is put all your eggs in one basket and watch that basket very carefully. You're not diversified, you're concentrated. You pick a handful of stocks, the winners might be, at least in Western terms, the Apples, the Googles, the Facebooks of the world, and you watch them very carefully. Watching them very carefully means following their financial conditions, watching earnings reports, tracking the fortunes of those companies as they evolve over time. And some of those kinds of investment activities have also led people towards great wealth as well. What I'm trying to say is there is no one-size-fits-all in this approaches to investing world. It is not even required, really, that you come to an academic institution like ours, whether it be offline or online like we are doing now, to try and look for information on how to go about this thing. Even if people are under-diversified and under-invested, there is a significant amount of interest in learning about financial markets that is visible to me as I travel around the planet, wearing my various hats as investor, scholar, academic, discussant, what have you. A couple of those that I should mention as well, just to sort of provide perspective here. In the US, there is this magazine called Investors Business Daily, started by a very noted concentrated investor who has now, so the IBD folks, as they have come to be known as, they have these meetups and matchups where they meet groups of people with some investment professional of some kind. They'll get together every month. They have stock picking contests. They have stock valuation contests. They're just a group of people outside an academic classroom kind of setting who are trying to learn about how to use financial markets to improve their wealth. There are other informal clubs in other parts of the world. There are investment clubs formed by society ladies to which sometimes I have gone out and done talks. These days also there's, in the last decade or so, a move towards financial literacy, kind of goosed by the global financial crisis of 7-8 years ago, where investment banks, mutual fund shops, all have education classes for their investors and try and teach them how to go about the business of studying equity markets and learning about stocks. So I'm very sensitive to this. I'm very sensitive to the fact that you can, for instance, go on YouTube and find all kinds of badly produced videos that tell you how a stock market works. Usually 5-10 minute clips provided by investment pundits who presumably have become successful. Of course, some might argue that the only source of their success is the fact that they got you to pay to watch these videos in the first place. But that's neither here nor there. The point is that there are alternative places for you to go. Of course, I'm going to be driven by, in this class as we progress, the knowledge of academic finance as I know it, also peppered with my personal investing stories as an investor, and try and point you to places where some work, some don't work. Bottom line in this business is there is no one-size-fits-all approach to investing. There are, we said long-term diversified. It's much harder than it sounds. You have to be almost Rip Van Winkle-like to sort of achieve that kind of disinterest in markets. And sometimes that has worked for people too, as my stories will show you going down the road. And what I will be showing you are tools, tricks, methods from my personal toolkit, from the academic toolkit, from other people's toolkits. Pick one that fits your level of risk tolerance. Here again, one line that I cite to my offline students fairly often. When you talk to investing people, there is a lot of conversation about risk management. Manage your risk and the returns will come, people will tell you. There is a very simple, intuitive definition of risk management that tends to work for me as an individual fairly often. if I have exposure to markets and I find that I cannot sleep at night, I am taking too much risk. It's as simple as you can do fancy statistics to figure out exactly how much risk you're tolerating, and institutions do that on a daily basis. There is this notion of value at risk that people carefully try to measure and adhere to. But you need to find a working definition of risk management that works for you, just the same way that you need to find a risk profile exposure level that's comfortable for you. It could be as a short-term trader. It could be as a swing trader that holds and trades positions for over 3 or 4 days. It could be as a medium-term trader with 5-6 month horizons. It could be the classic long-term investor as well. To sum this discussion up, my point simply was there are many approaches to investing. There are many places to learn about it. There are many ways to manage risk. You, as a student of this process, need to decide for yourself where on this spectrum of investment approaches you personally might